Okay, hi traders, here's a new video. First of all, the risk warning. Your invested capital may be at risk. Don't trade with money you can afford to lose, and this video is not investment advice. This video is another trading school, trade school, high frequency trading explanation and high frequency trading example video. I have only the weekends to do those kind of videos, so I will use this time to show you as much as possible and to explain as much as possible how and why and all those kind of stuff, and what kind of difficulties could be when trading binary option, and on my trading setups, on my trades, to get an insight how to use the Bollinger Bands, how to use the EMA, and how to understand price action and candlestick analysis. Yes, that is all together in this kind of trade school videos. Yes, and so let's see if we can start immediately, because all those things which I'm explaining are based on those things which I have explained in my ebook. I say I'm saying this all the time in every kind of video, but mostly do not understand the importance of those stuff, those concepts which I have explained in this ebook. So get this ebook, it's for free. You find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection, candlestick mass, trading setups, and all those kind of stuff which is important, and you will understand this because I have to do another video or another few videos about momentum. I don't know if I'm able to do this today because it's late here already, and I don't know if I will do this, but I will do this because it's important to understand also those concepts. So get this ebook, it's for free. You find the link in the description, and in the description you will find also the link to the Facebook group. Join the Facebook group, don't miss it. So, and this video will be about this kind of things here. Yes, this one here, where I talk about the high probability trading setup. Study those things which I have explained, about those things which I have explained here, about the no rejection trading setups. Yes, let me show you this. Where do I have this? Okay, I think you know, you can search them on the ebook on your own. Yes, so no rejection trading setup, and in particularly it will be one of those one. Let me show you this. Maybe it was this one. Yes, I will show you this then later. This one here. Yes, this one, and then or yes, this one, and or also this kind of things which I have explained here about the chart patterns, because you know the one of the most reliable chart patterns in binary option are the double top and the double bottom. They will occur often, yes, and they will not occur often. They will also happen and they will unfold often. So here, this one here about the double top here, it's in combination obviously with the last case, the pullback, but mainly the double top, and you see here the double bottom. Yes, and that's what will be also in this kind of video. So okay, get this ebook, study those things, practice them, watch the videos, the related videos, because the images are one thing, the videos are something else, and also watch my live trading videos, because this is only the theory. I cannot tell it often enough. This is only the theory, but you have to see the live examples, because there I'm gonna tell you the hints, yes, the insights, yes, how to trade those kind of setups. So, and you see here this kind of candlestick pattern, yes, the chart pattern of the double bottom, and you will see that this kind of double bottom here is exactly the same kind of scenario which I have traded, yes, a long time ago. So, and so let's see if I can show you those things, and then I will show you in detail what's happening. So, okay, we will switch now to the video where I have done the trade. We have it. So, and now I will, before I'm going to show you the trade, I will explain you a few things about the EMAs, the Bollinger Bands, and so on. So, First of all, we have here the downtrend. This is obvious. Yes, you see here red, 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 red. That means we have a downtrend. Yes, it's the downtrend is really dominant. Yes, you see only a few green candles, so we have a downtrend. The 20 EMA is heating down too. Yes, we got here high volume, high volatility because the distance between the Bollinger Band, yes, the upper Bollinger Band and the middle Bollinger Band is large. That means we have here large volume. Here the volume is less, yes, because the distance is not so big. But you see here, here was a little breakout. Here was a breakout, yes, and here was a consolidation area or ranging market, one of those things, yes. That is what you see immediately on the chart when you look at this, yes. And also here you see a flat 100 EMA. So, and here is the crossing, yes. Here is the crossing of the 20 SMA and the middle 20 EMA and the middle Bollinger Band. What does the crossing of the 20 EMA and the 20 or the 20 SMA or middle Bollinger Band mean? That means or you wait to get a pullback, yes, or you get a trend change. What is the case here? The case is here, we have a pullback head, here pullback, so there will be no trend change, we are still into a downtrend. So, and then after this prolonged, yes, extended downtrend, what do we get here? We get here a sign that there will be happening a double bottom on the neckline. The neckline in this case is not a horizontal line. Maybe yes, maybe not. Maybe it could be also the 1.182, yes, but it's in congruence, yes, in congruence with the 100 EMA, which is running here through the same level, yes. So you see this. So, and we got here this kind of double bottom for those one who do not see them, yes, what looks like a double bottom. And what is this? What is the point here? The point is, if you have a long downtrend, yes, and then you get a green candle like this one here, yes, which is showing that buyers are coming in, yes, then you wait before you're going to do a trade till price came back to this level here. That is what you should do. So you wait till price tries to get back to this level. So let me show you this. This level here. This is the area. You see where this kind of even a morning star is created, yes? This is the area where you wait the price gonna touch this again or get close to it. If price gonna break this, you will stay away from a call in this situation because that is what's important. You have to see here that what is creating here is a higher second bottom, yes? This second bottom here, this is the first bottom, this is the second bottom, is higher than the first one. And then that is not the only one. Then you get here this kind of hammer. Yes, this inverted bullish hammer. And that is exactly the same, and you can get the ebook, the same scenario like this in the ebook, only that in the ebook there is also a engulfing candle, a bullish engulfing candle before this, yes, because this double bottom is much smaller. But this inverted bullish hammer is a sign that price will go up further and not down. Yes, that is what's that about. Yes, that is telling me that we get. And this candle here told me before, yes, that buyers are here in and that buyers will sustain this trade. Yes, that will help to get the neckline here broken. Yes, that is what is telling. So. That is what the part before the trade, yes. And now we're gonna see what I have done in the trade, yes. So let's see. So I will do play here. So and then we see what's happening. So okay, I have done play. So you see, price is going up, and I will stop. It will stop the trade again. So and then I entered into. I want to enter. You see, I have already the mouse on the higher button. Yes. So and okay. Then I enter into this trade after this candle got above this level here. I want to enter exactly on this level. Yes. But after the price didn't got down. Yes. There is only one way where price can go. Yes. Because if this price would have gone below this level. below this level, let me show you this, below this level, yes, I would never have done a call. I have done maybe a put, yes, on the rejection maybe or something, or to get a higher entry point. But because the price didn't touch this level here, yes, it was for me a clear sign that price will mostly break the neckline, yes, because this is a continuation pattern. This, or you can see a continuation pattern for the uptrend or a reversal pattern for this minor downtrend, yes, and that is the reason why I enter on this late position into this trade also after we get through this area. We have here another area, yes, this one here. That is the reason why I didn't expect it that price will get down again, yes, because this will act as support level, so price would not retrace to this level again, yes. But after it broke through this area, it was a clear sign for me to do a call. So okay, we will continue. So and then shoots up, yes, because it tries to break the neckline, yes. So and it's coming down, doing some kind of panic. You know, market is doing some kind of panic, and then price will go up. I zoomed a little bit more in. I was not, you see, the neckline is mostly a dangerous part, but this kind of candlestick here has told me that price will go up. So, and that was the reason why. So when you see a trend, it doesn't matter if it's an uptrend or a downtrend. If you have a downtrend in this case, yes, and you see that price get here another time down, yes, here, this down, you have to confirm that price will not break this area. If price gonna break this area, stay out of a call trade in the downtrend, yes. If it doesn't break this and you get a reversal candlestick pattern like this one, you can do a call. That is what I have explained in the video about the double bottom and the double top, where I have drawn also this kind of scenario where you see this kind of inverted bullish hammer. This inverted bullish hammer can be also a long wicked pin bar, yes, a green pin bar, a bullish pin bar. It can be also an engulfing candle, a bullish engulfing candle. It's not only those kind of candlesticks which I'm showing you now. You have to adapt this. You have to use your creativity, and you know already all candlestick patterns, yes, or you should know all candlestick patterns, and so you can use your imagination and your creativity to apply this to all other kind of reversal and continuation pattern. Yes, that is what I try to explain you in this kind of videos. Yes, you don't have to wait it now for only for inverted bullish hammer. There are so many other reversal patterns, yes, or continuation patterns which can be used in this kind of situation. Yes, okay, so I think it was clear. So okay, then what I have done. Those one who have watched all my videos, yes, know what is after the price is going to break through the neckline. Yes, a strong trend will follow. Yes, that is what I'm telling you over and over and over again. Yes, after such a sharp pattern, engulfing candle, any other reversal pattern, you get a strong uptrend or a strong downtrend. Yes, you get a strong trend. Here, it's after the double bottom, you get a strong uptrend, and that is probably this what's happening here now. So let's see what's happening. Yes, I enter immediately. Why? Why did I enter immediately into this kind of trade here? Okay, that I entered immediately because first of all we have here this round number. So let me show you this. But much more important than this round number and this 100 EMA, yes, is that this kind of candle here, yes, is a strong bullish candle. Yes, it's a strong bullish candle, and in combination with this long downtrend, and I have explained this also often, that if you have done or if you had a long downtrend, yes, it's almost so that reversal, if a reversal is happening, and this kind of pattern is a reversal, if the reversal is happening, yes, that reversal will hold for longer than only one candle. That is the same what I'm telling you always for the 261.8 Fibonacci level, the 161.8 Fibonacci level, the 200 EMA, the 100 EMA. So this candle here, strong bullish candle, crosses the 100 EMA. After a so long downtrend, this is the 1 minute chart, 2, 4, 6, 8, 10, 12, 14, 16, 18, 20-minute downtrend. It's after a 20-minute downtrend, you get a reversal in kind of a, sorry, in kind of a double bottom. Then you can expect that this reversal here hold for more than only one candle, and that's the reason why I entered here immediately into a call without any kind of rejection or anything, because I am expecting that this reversal will now happen, right? Yes, it will happen like it should happen. Yes, that is why I'm doing it. So I didn't care about the market and about the panic-making market. Yes, because I know this is only the tentative of the sellers to go down, but this 100 EMA in combination with the round number will protect my bet. Yes, and that would be would start the strong uptrend. That is what you expect after a double bottom. So okay, let me see what's happened here. And you see it got a rejection from the 100 EMA. Then there was some kind of interference between the round number, yes, which is not really, it's a good round number. It's a 1.182, yes. But then the 100 EMA wins the fight, yes. The buyers are in control, and price will go up further. So let's see what's happening here. Okay, it's still doing panic, but at least you know the double bottom has unfolded, yes. And so there is no panic making action, yes, and you see it's going up, yes, and maybe also crossing the 20 EMA. Let me see this, maybe not, I don't know, because we are still into a downtrend. So I draw a horizontal line of this kind of and you see it was in the money. So now I'm doing some kind of explanation. I'm not entering in a trade now, and why I'm not entering in a trade? Because this situation was not so easy to understand. The thing is here, I didn't enter into this trade, yes, because now we touched here, or we are close to the 120 EMA, yes, and because, and I have explained this so often, yes, that if you have not a sign that the trend will continue in form of a nice pin bar, a nice hammer, or some other thing, engulfing candle, you know, those candlesticks which I have shown you in the ebook, yes, and because this kind of area is close, yes, to this level, and we have also the neckline which is close to this candlestick, which is not telling me anything. This candlestick is a bullish candlestick, yes, but it doesn't mean anything because we are too close to this, and I have seen already so often a pullback to this level. It can be also immediately if the downtrend is strong, because you don't have to forget we have almost the major trend against us. That means in such a situation, you stay away from a trade only because this candlestick is not telling anything. It's gone good here, maybe. Yes? It can be good because at the end it was to change that. But I have seen this almost often that this candle will be a red one, yes. So you cannot trust a candle like this, yes, because it's too close and it could be only a fake breakout or it could be only a pullback, yes, and it would be all immediately down. So you have to understand that if the price gonna break through the neckline of a double bottom, double top, or through some other thing, engulfing candle, a pin bar or whatever, you have to understand that you need a candlestick pattern which is telling you that the price will continue in this direction, and this candlestick is not telling this, yes, and that's the reason why I didn't have done any kind of trade here, almost also because the 50 EMA is too flat, yes, and we are here in this range area between the 1 deviation upper Bollinger Band and the 1 deviation lower Bollinger Band, at this critical situation where the middle Bollinger Band is. The middle Bollinger Band, and I have told it often, is a zone where price starts to consolidate. That means you get a red, green candlestick patterns, yes, patterns there, candles, only because, not because the candlestick, because those candlesticks are not telling anything. If you get such a pin bar or such a hammer, yes, such a hammer, which is not really a hammer, yes, because it should have a smaller body and a longer wick, yes. But if you get something like this on the middle Bollinger Band, you have to be carefully. That are mostly tricky. That are those things which gonna fool you, and you get after a bullish hammer, you get a red candle only because it's at the middle Bollinger Band. That is what you should know. So okay, I will say I do here play again, and let's see what's happening. So that the candlestick is coming down a little bit. Yes, then it's going up. That shows that price wants to go up more, but got a rejection. Okay, then I entered into a trade. So okay, why I did enter now into a trade? I entered now into a trade because I saw the movements of this candle, yes, going up. You see also the 20 EMA is getting away from the 20 SMA or the middle Bollinger Band. That means, and that is the reason why I have done a call here, after this pre-long downtrend, yes, we got now a reversal. And now this kind of 20 EMA will protect my bet because that will act as a support level. Why? Because price is gone above, got a rejection, but this rejection was not strong enough to break through the 20 EMA. And that was the reason, and that was a sign for me that price will go up further, yes, because this 50 EMA is almost flat. Yes, and because we are here now in this kind of area, I told this, where if the strongest trends are those one, yes, which are going from one Bollinger Band to the other side of the Bollinger Band. That are the strongest trends. That means they pass through the middle Bollinger Band if like a knife through butter, and that is what's happening here. Yes, now we got here an uptrend, and this uptrend showing me here now here with this kind of reaction that price gone above the 50 EMA, got a rejection from this EMA, 50 EMA, but doesn't got the rejection was not so strong enough to push the price lower, yes, than the 20 EMA, and that is the sign that the 20 EMA will protect your bet, that the 20 EMA will support your trade. So will be act as support area, okay? So, and we see here also there are here some other wicks which were before resistance, yes, and now you can believe that this will be now here some kind of support too. It's on the same high where I entered into the trade, okay? So let's see what's happening here. Now also all kind of EMAs are changing. You see the 20 EMA is the most fastest, and they are already changing in an uptrend, okay? So, okay, let's see what's happening. Maybe the market is doing some kind of panic, yes, but it tries to go down, but it's not able to go down. And you see it's going up further, only because the first one showed me that it was not able, yes, to get lower than this. So we have done already 3 trades here, yes. 1, 2, okay, 2 trades. Yes, it were 2 trades. 3 trades. Yes, it were 3 trades. That was the third one. So, and then I didn't enter into any kind of trade because now we are in the same situation like this one here. Yes, that I don't know what as what kind of area this will react. Yes, if this will be some kind of this resistance area or not. Yes, and I see it's shooting up, so I didn't enter into a trade here because the price can be also reject at any point. Then also the purchase time passed by, yes, and now we are getting close to this kind of area where the trade will be probably. You see here we have here this I'm showing this already in the video. Yes, we have here some kind of support and resistance area, and price is rejecting from it, yes. So, and now this will be here some kind of inverted bullish hammer, but with a long upper shadow, yes. So let's see what's happening, if there will be a trade or not. I do not a trade because I do not understand if price will go up further because the trend is already almost long. I have explained also that mostly you have to understand that the distance between the this one, the base or the lower low of the double bottom, yes, and the neckline, this one, yes, is mostly the same, yes, the same high like the profit target, yes. That is what I have explained also often, and here we would be already close to this with the fake breakout, yes, of this profit target, yes. So in this kind of situation, you will not do any kind of call if you are not sure, yes, that price will go up further. That is the reason why I didn't enter, because I love to trade those kind of inverted bullish hammers like this one. You see, I would trade also this one if it would happen here or somewhere. But in this kind of situation, after a rejection from the double Bollinger Band, yes, upper Bollinger Band, I do not trade anymore those kind of things if I'm not sure that price will go up further. So let's see what's happening. Mostly the problem is also here, I would not enter not even into a put in this kind of situation, yes, because in this kind of high, yes, it's really probably, because we see we have here an uptrend still, yes, because it was an uptrend, this kind of candle can be retraced above this level here, yes, above this level, maybe here, something like this, or maybe where this doji is, yes, price can reject or trace till this level. So it will be happen something like a doji or something, and you get out of the money because you have seen the movement was fast downwards. Yeah, it's really fast. So okay, let's see what's happening. Okay, I did it play. So I entered here. Okay, I have done. Okay, I entered. Okay, this was this kind of candlestick. Wait. So I have done. We were here. So okay. I have done play and didn't stop the video, and because I didn't stop the video, I already have it moved forward. Yes, so I have explained here also. Yes, you see the profit target. I have explained this already in the video too. Yes, I see this, so it was not necessary to do this. So and then it's got a rejection. That was the situation to enter into a trade here. Yes, on the rejection from this level here, it was, but I was maybe busy with explaining something, and I didn't took the trade. Yes, but that was a trade to take after the rejection from this area here. Yes, from this area one deviation, and also from the 50 EMA and the movement of the EMA. So this kind of movement, you will see this often. Yes, if you see a 20 EMA, which looking like a parabol, it's a parabol. Yeah, I think it's a parabol in English. When you see the 20 EMA getting like this, like a parabol, yes, it's going up. So in this kind of manner, you can be pretty much sure that you have a strong uptrend or a strong downtrend, depending in what direction it goes. Yes, if it goes down, yes, something like this, then you have a downtrend, yes. But like here, you see the 20 EMA, but not if you see this kind of form, yes, this kind of form, this parabol form, you can be pretty much sure that you get in a strong uptrend, and then you can mostly enter into it blindly, yes, because that is a sign that uptrend is starting. Yes, I have seen this kind of thing, but you should enter here at this position. Yes, so not too late, because after this price will tend to retrace. Overall, if you have here some kind of support and resistance area, so you can expect that price will retrace. But if you see this kind of 20 EMA getting this distortion, yes, you can believe that price will go up further, mostly also more than one candle, but you have to be carefully that you enter early, yes, because this is a lagging indicator. That means it's moving after you move, but you can see this kind of movement. And if you have the practice of this candlestick chart and this candlestick chart patterns, and you know that there will be maybe uptrend, and you see this kind of deformation, you can enter into a trade securely. Yes, okay, so that was this one. So and then okay, that is this what I called the no rejection candlestick pattern. Those one which I have explained. You see, we have here, and let me explain this. So you see here, this wick and this kind of area here, yes, which also only where you see that this kind of thing here is a fake breakout of this kind of area, yes, and this kind is a strong resistance because you see 2 weeks. That is this one what I have shown you in the ebook. Maybe it's another one. I have to look at this again, yes, but I have explained this kind of scenario also in the ebook. And you see we have here a pin bar which should tell somebody, yes, that the price will go up. This pin bar is only there to fake, yes. You get an inverted bullish hammer, then you get a pin bar, yes, then you can expect that the trend is almost over, yes, that this kind of candlestick is not anymore telling you anything, and that's the reason why I entered here into a put, only because I understood the trend is over, because we have here this kind of resistance area, we have here much more resistance, yes, which this candle looks like they would be broken, yes, but they didn't broke this, yes, and that's the reason why I entered immediately into a put on this level, yes. Maybe this is also some kind of Fibonacci level, yes, the 161.8 Fibonacci level or the 200. I think more the 261.8 Fibonacci level. Here or here, it's one of those. Is a 261.8 Fibonacci level, yes, because from the distance here I would think that will be, if you put here the swing high and here the swing low, yes, and you apply the Fibonacci level here, you will get here at this level the 261.8 Fibonacci level. That is what I suppose, what I think would there, yes, and okay, so let's see what's happening and how this trade is going. So I entered immediately without any kind of rejection because I understood that we have here now a resistance area. Price got a rejection from this support area, yes, which was before, and then price is turning around because what is after a strong uptrend from a sharp pattern? Yes, there should be the pullback to this level here, to the neckline, and that is what price is probably doing, yes. And you have seen 4 trades only on this kind of nice chart pattern, yes, the double bottom, yes, and you see how and I missed also one, yes, it would be foot for 5, it will be 5 trades in a row, yes, only because I was explaining and I missed this kind of candlestick here, what was also a nice one after the rejection from the 1 deviation and this distortion of the 20 EMA. Okay, so that was this video. Yes, I have explained my trades. I think I have also mentioned some things which would help you. So I would say that was it. Yes, you could also continue this kind of scenario here and doing here, for example, another put after this, yes, to do the 6 trades, and so you could do only on one chart pattern till 6 in the raw, yes, in the money. So okay, that was it. If you like this video, do a like. If you didn't subscribe to my channel, and if you have something to say, drop me a line in the comment section. So I would say stay safe, yes, and bye bye.